I think that one of the hardest concepts for new investors to grasp is that investing is really nothing more than just a giant gray area. And by that, I mean there are multiple different approaches, strategies, and interpretations for how people are able to pick stocks. There are a lot of technical traders out there that use charts to try to determine price predictions and momentum. And then you have fundamental traders, which is more like myself, who looks at things like earnings calls or ratios and management of the company to try to determine if this company will be a good investment. But one thing you will consistently hear when it comes to investing is knowing what you're buying. And that makes sense, right? But what if I told you that one of the best stock pickers was a blindfolded monkey throwing darts at stocks? And I'm not making that up either. So today we're going to put that to the test. Hey everyone, thanks for joining me today. My name is Matt, and if you're new here, welcome to my channel. Hope you enjoy my videos. I make weekly videos talking about stocks and finance and investing, building portfolios, all of that good stuff. So if you haven't subscribed already, which it looks like 80-something% of you haven't, I just ask that you consider doing so. It's free and only takes a second of your time. Now, I'm sure many people out there are already familiar, but there is a very famous book in the finance world called A Random Walk Down Wall Street. And the book is written by Dr. Burton Malkiel, and I am so sorry if I'm not saying that last name correctly. Now, Dr. Mulvihill was a professor or an economics professor at Princeton. So really smart guy that wrote this book. In his book, A Random Walk Down Wall Street, he states that stock prices are completely random, therefore cannot be predicted. Now, this triggered a lot of technical traders out there because basically what he's stating is that using charts is assuming that history repeats itself and saying that you can't use history to try and determine the future of a stock performance. Now, he tested this theory in his class by flipping a coin every day. If the coin landed on heads, this imaginary stock went up $100, and if it landed on tails, it would go down $100. Basically, at the end of this test, it really showed that there was no consistent performance between the heads and tails of this coin, meaning that you cannot predict the prices of stocks. Now, before I continue, I do just want to say this is a very controversial topic in the finance world, but take it with your own interpretations. A lot of people have been rebutting this theory, and it goes for both sides, not just technical traders. Fundamental investors have also been trying to contradict or find, basically a lot of people have been trying to prove this theory wrong, and some people have, other people haven't. So where does this blindfolded monkey throwing darts at stocks actually come into play? While explaining the random walk theory, Malkiel said, in its extreme logical meaning, and I'm just going to read this right from my screen, so sorry looking at that, it means that a blindfolded monkey throwing darts at a newspaper's financial pages could select a portfolio that would do just as well as one carefully selected by experts. So he's implying that basically anybody can just pick a stock and it has the same potential to perform just as well as somebody who's taken the time to learn about the company, understand their financials, or using charts to look at their momentums and using moving averages to try and determine the price predictions. So that's where you could see that a lot of people who are highly educated investors with incredible backgrounds, he's basically saying that your education is meaningless when it comes to buying stocks because it's just totally random, hence why it's called a random walk theory. And the Wall Street Journal did actually do a test with this. Now, of course, they didn't actually blindfold a monkey and start throwing darts at the wall. They did blindfold themselves and throw darts at stock picks on the wall, but no monkeys were actually used because that would just be too much of a liability in all seriousness. And they ran this test for a very long time, but ultimately it seems to be one of those that there's no real answer for what the outcome was with this. It seems like some people agree with the theory still, other people don't. One person even claimed that they significantly outperformed the monkeys' picks by millions of dollars in 2013. But later down the road, it came out that the person actually skewed the numbers in their favor, making those results also inconclusive. So today, I'm going to put that to the test. Now, I don't have a dartboard to actually throw darts at and kind of pick stocks that way. And I really don't even have the place in my house to put a dartboard. So I'm going to make this a little bit differently. Now, what I'm going to do is I have my face mask here. So I would blind myself, something like this. And then what I'll do is I'm going to take this hammer and I'm going to throw it at the wall where I have stocks posted. I'm just kidding. That's not what I'm actually going to do. So what I did, because I tried to download all of the holdings in Vanguard's total stock market as a PDF file and then use like one of those random number generator things to randomly pick stocks, but unfortunately I couldn't download their holdings, and it's over 3,000 holdings. So I was able to download all of the positions inside of the S&P 500, which is actually 505 stocks. What I'm going to try to do is film my screen or record my screen while I use a random number generator between 1 and 505 to pick those stocks for me. Now, I've mentioned this before, it's an issue of my fault, personal problem, sorry, but sometimes my computer will randomly shut off when I start filming my computer screen. So if that happens, I'll take some screenshots and you'll just have to trust me with this. But my goal is to actually film it so you know I'm not making this up or I'm not picking these stocks, because what I'm going to do is pick 15 stocks from the S&P 500 at random, and I'm going to personally pick 15 stocks for my Watchlist Wednesday portfolio, and then over time we'll compare the performance. And I'm actually going to use a third variable for this, and I am going to compare the performance of actually 4 variables. So we're going to have the random 15 from the S&P 500, we're going to have my random 15 or my selective 15 from the Watchlist Wednesday portfolio, and we're going to be comparing all these numbers with the Vanguard's total stock market and just an S&P 500 index fund to see which over time actually performs the best. Now, of course, I hope it's me, but we will see what actually ends up being the best performer. And before I start this, I just want to say the random walk theory is a very in-depth concept. And just like everything else with finance, you really just have to have an open mind to understand where these people are coming from. And it helps you become a better investor if you don't hear something as outrageous as monkey throwing darts can pick the best stocks and say, just completely brush it off. I always think it's really important to just learn what other people are saying or how they go about their trading and investing so that you can ultimately become a more strategic and better investor. So with that said, let's see if I can actually put this to the test. All right, so again, I'm not sure if this is gonna work. Hopefully it does. We can see I just have Google's random number picker on the left, and then I have all of these stocks put in numbers on the right. And as you can see here, you'll see all of the numbers, so that's just the number I'm going to pick. And just so you know, they're all here, and I'm not cheating this at all. There we go, 505. So you should know that this is as authentic as I can make it. Now, I didn't hit generate already, it just came up with the 3, but let's go ahead and start. All right, so 48 is going to be the first company. For that, we have Applied Materials Inc., ticker symbol AMAT. So I think that might have actually worked. I'm not sure, and I'll see when I edit the video, but what I'll probably do is just show that at a high speed of me going through and doing all of those, because it's going to be kind of boring. And you'll see I did click generate more than 15 times. That's because oddly, like 4 times I had the same number come up. So not thrilled that that happened, but it is what it is. So what I'll do here is I'll pop up just the random 15, my 15, the S&P 500, which I did have to use SPY for. I can't apparently, with what I'm using, just show the actual 500 index itself. Also, most people out there, when they buy the 500 index, buy SPY anyway. So I just figured that would be a good one to use. I know I always say that an ETF is not the index, so bear that in mind, and it still stands true. But most people out there, when they buy the S&P 500, buy SPY. And I also have VTI, which is Vanguard's total stock market fund. And I'm choosing that one because Dr. Maciel actually has recently said that investors really just need to buy the entire market, because he feels that buying emerging markets is what's really going to help grow your portfolio. And generally, it's the small cap stocks that also provide significant growth. So that's why I'm doing this a total of 4 comparisons between these. Obviously, I already know I'm going to win. I already know I'm going to have the best performers. totally kidding. I'm actually very curious to see what these outcomes are, and really what we're just getting at here is, as you guys all know, I make the weekly videos of doing a stock analysis and adding it to a portfolio. But I'm curious to see if that's worth my time. I want to see if maybe just picking stocks out of the blue actually is better than trying to have a strategy behind it and then comparing it, or would I be better off just buying a single index or the entire market? So that's going to be kind of the premise of the video here, and I hope that you guys enjoyed just kind of following along with me. Sorry I couldn't throw darts or hammers or anything at walls. I really wish I could have, but we had to improvise a little bit, and so we'll just see how this happens. A lot of this too, what kind of stemmed the reason for this video is when I made my video a few weeks ago talking about how the market is totally unpredictable, the random walk theory actually came to my mind, and it's truly what it feels like. Again, companies that are performing well shouldn't be performing well, and the ones that are doing poorly should be the ones performing well. So I just thought it would be an interesting time to try this out. I hope this video makes sense. If you haven't read or heard of the random walk theory or random walk down Wall Street, I highly suggest checking it out because it's just a very unique approach to investing. And again, have an open mind reading it. No, you might not agree with it completely, but I still feel it's just very important for you to know other people's approach towards investing. So with that said, might actually have a quick video for today, so I'm going to wrap up there. I think what I'll do is check in like a month from now, then 3 months from now. It's important to note too, today is September 28th, 2020. So yeah, also I should explain that in these positions, I just truly typed it in on the computer. Whatever price came up at is what I went with. So that's why you'll see everything should have no gain right now. That's about it. So we bought 10, and we bought 10 shares of each. So 10 shares, whatever it was trading at, and there was nothing like scientific or specific. I didn't try to weight these differently or have the same total amount of investment. It's truly just random stock picks, 10 shares of each at what the market was trading at. So again, we'll check in a month from now, then maybe 3 months from now, then maybe 6 months from now. And if I'm still making videos 5 years from now, maybe we'll just keep checking on it. Who knows? So again, hope you enjoyed this video today, but I'm probably going to wrap up here because there's not much else to say. It's just an experiment here and you guys get to watch it all happen. So hope that you enjoy this. If you like me doing kind of different videos like this, let me know. I enjoyed making this, but admittedly, I think I'm going to stretch my editing abilities a little thin here, but hey, worth the shot. We'll try it out. So thank you so much for taking the time out of your day to watch this video. If you haven't already, I hope that you like this video, and again, consider subscribing because still 89% of you are not subscribed, and it's free. That's my new thing. It makes it easier for me to say subscribe is just by saying it's free, and it just takes a click of a button. But again, thank you for watching this video. You could be anywhere in the world and you're right here with me, and I really appreciate that. But it's time for you to go ahead, get outside, and enjoy the rest of your day, and I will see you next time.